Learning about the technology that underlie cryptocurrency. What is cryptocurrency? A cryptocurrency is a digital or virtual currency secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Most cryptocurrencies exist on decentralized networks using blockchain technology, a distributed ledger enforced by a disparate network of computers. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. Understanding cryptocurrencies. Cryptocurrencies are digital or virtual currencies underpinned by cryptographic systems. They enable secure online payments without the use of third-party intermediaries. Crypto refers to the various encryption algorithms and cryptographic techniques that safeguard these entries, such as elliptical curve encryption, public-private key pairs, and hashing functions. Central to the appeal and functionality of Bitcoin and other cryptocurrencies is blockchain technology. As its name indicates, a blockchain is essentially a set of connected blocks of information on an online ledger. Each block contains a set of transactions that have been independently verified by each validator on a network. Every new block generated must be verified before being confirmed, making it almost impossible to forge transaction histories. The contents of the online ledger must be agreed upon by a network of individual nodes, or computers that maintain the ledger. Experts say that blockchain technology can serve multiple industries, supply chains, and processes such as online voting and crowdfunding. Financial institutions such as J.P. Morgan Chase & Company, JPM, are using blockchain technology to lower transaction costs by streamlining payment processing. Types of cryptocurrency. Many cryptocurrencies were created to facilitate work done on the blockchain they are built on. For example, Ethereum's Ether was designed to be used as payment for validating transactions and opening blocks. When the blockchain transitioned to proof of stake in September 2022, Ether, ETH, inherited an additional duty as the blockchain staking mechanism. Because there are so many cryptocurrencies on the market, it's important to understand the types of cryptocurrencies. Knowing whether the coin you're looking at has a purpose can help you decide whether it is worth investing in. A cryptocurrency with a purpose is likely to be less risky than one that doesn't have a use. Most of the time, when you hear about cryptocurrency types, you hear the coin's name. However, coin names differ from coin types. Here are some of the types you'll find with some of the names of tokens in that category. Utility. XRP and ETH are two examples of utility tokens. They serve specific functions on their respective blockchains. Security tokens. Tokens representing ownership of an asset, such as a stock that has been tokenized, value transferred to the blockchain. MS token is an example of a securitized token. If you can find one of these for sale, you can gain partial ownership of the Millennium Sapphire. If you find a cryptocurrency that doesn't fall into one of these categories, you found a new category or something that needs to be investigated to be sure it's legitimate. Are cryptocurrencies legal? Fiat currencies derive their authority from the government or monetary authorities. For example, each dollar bill is backstopped by the US government. But cryptocurrencies are not backed by any public or private entities. Therefore, it has been difficult to make a case for their legal status in different financial jurisdictions throughout the world. It doesn't help matters that cryptocurrencies have primarily functioned outside most existing financial infrastructure. In the US, the legal status of cryptocurrencies creates implications for their use in daily transactions and trading. In June 2019, the Financial Action Task Force, FATF, recommended that wire transfers of cryptocurrencies should be subject to the requirements of its travel rule, which requires AML compliance. Most countries have failed to implement travel rule. In the United States in July 2023, courts ruled that cryptocurrencies are considered securities when purchased by institutional buyers but not by retail investors purchased on exchanges. Enthusiasts called it a victory for crypto. However, crypto exchanges are regulated by the SEC, as are coin offerings or sales to institutional investors. So, crypto is legal in the US, but regulatory agencies are slowly gaining ground in the industry. In Asia, Japan's Payment Services Act defines Bitcoin as legal property. Cryptocurrency exchanges operating in the country are required to collect information about the customer and details relating to the wire transfer. China has banned cryptocurrency exchanges, transactions, and mining within its borders, but has a central bank digital currency, CBDC. India was reported to be formulating a framework for cryptocurrencies, but until it is enacted, crypto is not yet illegal. Exchanges are free to offer cryptocurrencies. In Europe, cryptocurrencies are legal in the European Union. Derivatives and other products that use cryptocurrencies must qualify as financial instruments. In June 2023, the European Commission's Markets in Crypto Assets (MiCA) regulation went into effect. This law sets safeguards and establishes rules for companies or vendors providing financial services using cryptocurrencies. Are cryptocurrencies safe investments? Cryptocurrencies have attracted a reputation as unstable investments due to high investor losses due to scams, hacks, bugs, and volatility. Although the underlying cryptography and blockchain are generally secure, the technical complexity of using and storing crypto assets can be a significant hazard to new users. Advantages and disadvantages of cryptocurrency. Cryptocurrencies were introduced with the intent to revolutionize financial infrastructure. As with every revolution, however, there are trade-offs involved. At the current stage of development for cryptocurrencies, there are many differences between the theoretical ideal of a decentralized system with cryptocurrencies and its practical implementation. Advantages explained. Cryptocurrencies represent a new, decentralized paradigm for money. In this system, centralized intermediaries, such as banks and monetary institutions, are not necessary to enforce trust and police transactions between two parties. Thus, a system with cryptocurrencies eliminates the possibility of a single point of failure, such as a large financial institution setting off a cascade of global crises, such as the one triggered in 2008 by the failure of large investment banks in the United States. Cryptocurrencies promise to make transferring funds directly between two parties easier without needing a trusted third party like a bank or a credit card company. Such decentralized transfers are secured by the use of public keys and private keys and different forms of incentive systems, such as proof of work or proof of stake. Because they do not use third-party intermediaries, cryptocurrency transfers between two transacting parties can be faster than standard money transfers. Flash loans in decentralized finance are an excellent example of such decentralized transfers. These loans, which are processed without backing collateral, can be executed within seconds and are used in trading. If you find this video useful, don't forget to like and subscribe to our channel. Backquote.